don't think you're going to see a huge wave of repossessions. I don't think the banks are going to suddenly want to take the losses on their balance sheet and make them real.
Hi, I'm Jeremy Wolf with Fleet Owner over here in Columbus, Indiana at Act Research's Market Vitals seminar. I'm with Tim Denoyer, a senior analyst. We're going to talk a little bit about carrier profitability, the shift to private fleets, and how fleets have been doing so far in this freight recession. Tim, thanks for talking with me.
Thanks for having me.
So, the move to private fleets, that sounds like a pretty significant part of the whole narrative. Could you start with that? What's been going on with private fleets?
Yeah, it's a big shift over the past few years, and it's starting to reverse. See, after the pandemic, the private fleets were not very happy with the for-hire carriers. They lost some fidelity in that supply chain, and they wanted to bring some freight in-house. So we added a whole bunch of equipment over the past few years. That insourcing has been really bad in terms of dragging out the freight recession. But the good news that we're seeing right now, it's not really going to help the for-hire market immediately, but we're seeing a reversal in that trend where private fleets are starting to reduce their orders for tractors, particularly day cabs. They're starting to sell the day cabs at elevated rates, and we think that capacity contraction is eventually going to be good news for the cycle. Not quite tomorrow, but sometime next year.
So everyone's been talking about overcapacity and that being a major contributing factor to how bad for-hire fleets have had it, and private fleets have been a major contributor to that.
Yeah, we think so, yeah.
And there's been some other lingering capacity problems going on as well that's made things difficult, right?
Yeah, that's exactly right. It's not the only problem. The for-hire market, there's a lot of owner-operators who have hung on quite a lot longer this cycle than they typically would, and there's a number of reasons for that. The amount of money that was made during the pandemic, the amount of money that was given away during the pandemic, and banks being relatively forgiving in their loans, and all that has led these owner-operators to stick around a good bit longer than expected. It's all making it very difficult to figure out when the next upcycle will come. But one of the things that we do know, and we're definitely hearing from the manufacturers at this seminar, is that build rates are coming down, and so we know that capacity overall is going to start shrinking soon.
And industry experts have been pretty surprised by how long a lot of these owner-operators have been holding on throughout all of this. Can we talk a little bit more about what we expect to see from banks, whether they'll repossess this equipment soon, whether these owner-operators are going to shutter over time as these build rates come down, whether they won't be replacing their trucks?
Yeah, it's a combination of things. I don't think you're going to see a huge wave of repossessions. I don't think the banks are going to suddenly want to take the losses on their balance sheet and make them real. And used truck prices are recovering a little bit, so their motivation to do that is coming down a little. They generally just want to keep the customers in business in order to make sure that they don't take those big losses. And so some of this stuff just takes time to work through. And one of the concepts that we talked about at our seminar is just there's going to be a rising wave of replacement demand for equipment over the next several years. Again, it's not going to start tomorrow, but it's as we look later in the decade, the number of trucks that will be just getting old and need to be replaced is going to be going up. So that should help the market balance eventually too.
So there's a lot of things for carriers to be hopeful for. Private carriers are going to be reducing their numbers. Owner-operators are going to be shutting their operations more. Production numbers are going to go down. Capacity is going to go down. And around that same time, demand for equipment is going to go up. Is that going to challenge the availability of trucks?
Well, eventually, we could get into a capacity crunch for sure. We need the demand side of the equation to work, and that's the big missing piece of the puzzle right now, is that tariffs are starting to have a negative effect on demand, and so that's drawing out that rebalancing. And I think we'll get to a point next year where all this capacity tightening that we're experiencing will eventually drive rates higher. But unfortunately, we still have a lot of trade war headwinds to work through in the meantime.
All right, Tim, thank you for talking with me.
Thanks for having me.